And to all my business owners and future business owners, anybody that want to be self-employed or work for themselves, you have to know that your corporate structure of your business is one of the most important things of your business. You have to know the difference between LLCs, C corporations, and S corporations, especially around tax time. Right now it's tax time. You have to know that an LLC, without filing the right paperwork, is considered a disregarded entity on the federal level. So the IRS still puts all that money on your Social Security. It puts it on the Schedule C, but that's still linked to your 1040. That's still linked to your Social Security number. So that takes you away from being able to claim a lot of things, especially in the beginning years. Your business might not be profitable. Your business might not make any money. But if they see all this money, even though you write it off and your net going to be way different than your gross, a lot of federally funded things, if you go past a certain amount of money on the gross, it cuts you off of. A lot of self-employed people might need government insurance. You might need Medicaid. You might need food stamps in the first couple of years of your business. And if you show too much money on your LLC, even as the gross, even though you write it off, it's still going to show up and stop you and disregard you from getting a lot of tax breaks and a lot of things on the federal level or the state level. You want to know, business owner, I always tell people to file quarterly, especially as a truck driver. All my truck drivers out there, you want to file quarterly, man. You do not want all that money at the end of the year trying to find every receipt, every time you was here and there and there. You do not want all that at the end of the year. You file quarterly, that way you can stay ahead of your books. You make sure your logs is kept up to date and you keep all your receipts. You're able to get $80 a day per diem for food. $80 a day. If you spend $125 or $100 or $95, you're able to get the entire $80 for that day. If you spend $50, $65, you're able to write off $50 to $65 for that day. But you have to have your logs to match to show that you was at work or on duty around that time where you put in your per diem. You gotta have a per diem tracker, a food tracker. All your food, all your clothes, all your boots, all your coats, everything is a write-off for your business if you keep the right receipts. Right now, it's more IRS agents than ever. They strong on this tax season, and the IRS will audit you if you do not have all your books together. If your stuff do not make sense, they will audit you right now. And during that audit, if you cannot produce receipts, if you cannot produce invoices, they're going to bill you for that. The people you saying, oh, I paid this person to do this, I paid this person to do that. If you're not able to produce invoice, that's going on you.